Welcome to Mark Arnold's Finance. Today I want to talk about Meta's hidden opportunity. This is something I don't think a lot of people are talking about, and if you're a holder of Meta, of course you're probably in the red, so this is going to be something I think you will really want to hear. There's also been a few other companies that had some major drops in the stock market, and I want to talk about them being Adobe and FedEx. So these are two companies we are also going to dive into and talk about. But if you're new to my channel, this channel is all about transparency. I show my portfolio performance with every single video. I provide diverse quality content, and I want to help everyone here on this channel by sharing my knowledge because we're all growing together, and I really do appreciate all my subscribers when you comment and share your knowledge to me because I get to take that and grow myself. So this is a channel that should help all of us, so join, give it a try, and thank you so much for all your support. So let's get started with the transparency and looking at my portfolio performance. We will see here that I am down a little over 3%. So I'm down 1% from my last video. Of course, the market has had to deal with inflation being higher than expected and a few other negatives. Go ahead and take a look at this. If you have any questions, let me know. Anything in purple is the allocation by market value per company or ETF that I have. And of course, one of the companies I will be talking about is Meta. This has been a big negative for my portfolio. I am now down 33.72%. It's a decent holding. You'll see there, just by market value, keep in mind it's down 33%. It's already 8% my portfolio. So when it's in the green, it's probably closer to 12%. So this is one that's really been hurting, has created some decent loss for me, but I am still hopeful, and I'm going to share some reasons why. I'm also going to share the struggles that they've been going through. So let's get right into this video and talk about Meta. If we look at their stock chart, we'll see they're down over 61% from their all-time highs. That's crazy to me because I think a lot of people thought Meta was a very sturdy company, you know, that would provide long-term growth, and to be down over 61%, a lot of people are in the red. From even 5 years ago, it's down 14.3% just about. And in the last week, it's down about 12.5%. So Meta has been a horrible investment recently, but long-term is what I'm looking at. And so what has really hurt Meta are these things. We've had iOS, the Apple iOS changes, which allowed users to say, I do not want to be followed by Facebook for advertisement purposes. And that's just decreasing their ad revenue. We have TikTok, which is a huge rival right now that is really taking some market share from Meta and taking away that ad revenue again. Then we have sales declining. They reported their earnings for second quarter, and when you compare quarter year over year, they were down just about 1%, the first time ever for the company. And again, that's showing that decline in ad revenue because that's their main business. And they're also predicting further decline for their next earnings report in third quarter. So the fact that the projections are bad too caused this stock to really go down. Not only that, but you have the Metaverse. Now this one is controversial, and you can either see this as a good or bad thing, but I will say that I am bullish on it, but I'm okay if you're bearish on it. So this is something that can be looked as a negative or a positive. I think it's going to be something long term that should be positive, but it's going to take some time and patience. But regardless, investors overall did not like that in changing its name to Meta. Then you have regulation of big tech in general that Meta has to deal with. So there's a lot going against Meta, affecting its ad revenue, affecting, you know, its growth, and this is just something that has really beat down this stock recently. Now for their hidden opportunity. This is something that I came across in research, and this is giving me more hope than I even had before with Meta, and I'm already pretty hopeful. I'm pretty bullish on Meta long term. I think they have great financials. We're going to look at the metrics chart at the end and but look at Meta, Adobe, and FedEx and just kind of talk about it. But their hidden opportunity is the click-to-message advertising. Yes, click-to-message advertising. So what is this and why is it a hidden opportunity? Well, let's get started with this kind of new opportunity, and you'll see this headline here, why Meta is investing big in business messaging. So we're going to kind of walk through this article quickly and kind of, I hope by the end, this kind of gives you a little bit more light onto why I'm now even more bullish on Meta, and maybe you should be too. So this was an interview with Dan Levy, who is the VP messaging person with Meta, And this article states, Meta is struggling to get its wheels turning on Reels. A leaked internal report recently revealed that Instagram Reels gets 10 times less engagement than videos on TikTok, and that's no surprise to me. TikTok is so popular. It's just a great platform if you do use it. But Meta has seen more success with business messaging, which Mark Zuckerberg highlighted as a priority during Meta's second quarter earnings call in July. So I think it's something that got looked over, but now that I'm looking at it, I'm like, this has huge potential. So Meta estimates that around 1 billion people per week communicate with a business or service account across WhatsApp, Messenger, and Instagram. Yes, 1 billion people. That's a huge opportunity. And roughly 40% of Meta's advertising globally, which is more than 4 million, use click-to-message ads. So you see an ad and you click on it. And that directs people from Facebook or Instagram into one of Meta's messaging products to chat with a business. So I think you might see where this is going, but it's a chat opportunity where customers can talk directly to businesses through chat. And this is something that is gaining more popularity, which I'll talk about more in a minute. So the company told investors last quarter that click-to-message advertising is a multi-billion-dollar business. Keep in mind, Meta's market cap now is below 400 million, and this is a multi-billion-dollar business opportunity. Of course, Meta will take a part of that. Doesn't mean it's all for Meta, but with all they bring in now with ad revenue, adding this to it, this opportunity is just a great thing in my eyes. So Meta could have double-digit growth, or it does have double-digit growth year over year in this segment of its business. So it is a growing part of its business, which is good to see with Meta. So it's one of the fastest growing products, according to Dan Levy with Meta. So yes, this text chat with businesses is what's really gaining this popularity. And if we move on here, it says the messaging opportunity is threefold, Levy said. Businesses can use messaging to market to their existing customers, to manage their user-initiated service requests, or to accomplish a functional task like requesting a password. He says our job is to create products that make all of those use cases as easy as possible for everyone. We go through some questions by this interviewer with Dan Levy, and they asked, why transition from focusing on ad sales and ad products for small businesses to focusing on messaging? And he says, I'm betting my career on business messaging. And the reason why dates back to a trip I made to Southeast Asia in around 2013 to 2014, where I saw firsthand that businesses were using ads to direct people to messaging products because that was how people wanted to communicate. One business in Singapore literally had something like 30 smartphones velcroed to the wall that they used to stay on top of their messaging from customers. But that can't be scaled. So the promise of messaging is personal interaction that feels similar to how you'd be able to interact with a business in the real world. The challenge is figuring out how to scale that and bring in automation while keeping the personal touch. The next question that they ask is, how would you describe Meta's approach to business messaging? So Dan said, you've got to build the right consumer experience first, because businesses will go where the people are, and that is so true. Businesses want business, and so they're going to go where they're able to get business. He says there's no question that we're already living in a messaging-first world, and now businesses are adapting. On our side, click-to-message ads are going well, and we recently launched the Cloud API for WhatsApp so businesses can initiate conversations and message users directly, usually for marketing purposes. But we also recently completed the acquisition of Customer, spelled with a K, which is a broader investment we're making in consumer service tools that helps make business messaging and CRM management easier. So they are putting a lot into this. They acquired this company, and they're wanting to make it a very personal interaction between businesses and customers through these text messages, or you can call them chatbots. So far, I think this is looking pretty positive in my eyes. If we keep going on, he says, the interviewer says, is the idea here that advertising can be a utility? And he says messaging in general is a utility. When I was in Europe this summer, the hotel didn't even want me calling the front desk. I was able to take care of everything I needed by messaging back and forth with the hotel, whether that was checking in or making a service inquiry. There's been an evolution in consumer communication behavior. So I just want to stop here for a second. And one of the things I want to mention is sometimes the internet provider I have, my internet gets messed up, and I want to get on and check how to fix it. before I used to call, you'd be on hold forever, then you talk to some buddy and it would be really difficult. It takes so much part of your day. Now, the internet provider I have, they have a messaging text option. And I can't tell you how easy it is to say, here's my problem, then they reply to you, and then you just go back and forth until it's resolved. And it doesn't take as much time because you can set your phone down for a minute, go do something, come back and be like, okay, and it's been resolved every time now through text only. And yes, it's new and it's a little bit weird for me, but I love it now. It's nice to just communicate through text, and it's been very successful in my eyes for what I had to use it for. And I see this something that all businesses are going to start using. In fact, the business I work for has this like kind of chat bot thing that they're starting to utilize too. And I think that's something that's going to happen with pretty much all businesses going forward. So this is a huge opportunity for Meta. If we go on, we have 4 more questions I want to cover that the interviewer asked that really reveal some great things. So they said, what do you mean when you say communication is about threads? So he says, the way people communicate with businesses is starting to look a lot like how they communicate with their friends and family. And that's exactly what I've experienced in my life. Then he goes on to say, this is more the case outside the US though. The US has been a bit of a laggard. People in the US don't always realize what a big deal messaging is everywhere else in the world. We have more than 1 billion people on our messaging platforms every week. It always seems like the US is the last to adopt technology in the big picture. There's a lot of other countries that do it first. So one thing I want to mention is, you notice restaurants doing this now where you don't anymore have that buzzing device. It's just the text message. You go and you say you have a party of 5. They'll say, what's your number? You give them their number. They'll say, we'll text you when it's ready. And that is great because you don't have to worry about these buzzing things that you have to hold on to. You can just check your phone and it's super easy. This is proof, again, not only with my internet provider, but with restaurants that they're starting to do this, and the company I work for. So this is a big thing that I didn't think about that this article brought to light. So the next question they asked is, how many of those interactions are with chatbots? How do you make sure the experience is good? I've tried to resolve issues in the past using a company's chatbot, and I usually end up having to call customer service anyways, which is frustrating. So he says, a lot of questions can be answered simply using automation, like queries about store hours or the status of an order. That's how a lot of businesses use our products today. You can take care of somewhere between 50 to 70% of queries through an automated system. But if the conversation is more complicated or more valuable, that's when you transition to a live human. Regardless, it's powerful to have all these communications in one thread rather than having different systems for email or phone or chat. The service experience should be built around the person, not around the ticket or the type of technology you use to deal with it. So 50 to 70% is still, handled through just these chat bots without it being extremely personalized or someone having to go to a phone call, which is a huge percentage that can be just taken care of pretty immediately. If we go on, the next question, we have 2 more. The interviewer asked is WhatsApp or Messenger better for business use cases than, say, Instagram Direct or vice versa? I really liked his answer. He says, businesses don't really have to think about that. We optimize messages so that they're delivered on the messaging service where we think a person is most likely to respond. And businesses have a unified inbox so they can respond to any message in one place as opposed to having to hop between apps. So they've really made this a great thing for businesses where the businesses don't have to guess which app someone's on or anything. They just respond and it goes to that person. So this is awesome. This is just showing the technology side of it, the optimization, and it's really a great thing. So if we move on to the last question that I want to cover and show you guys, they asked, what are you doing to encourage more messaging first behavior in the US? He says there are entry points on Facebook and Instagram where people can directly message a business through their page, and we have click-to-message ads, of course. But there are also generational trends we've been paying attention to. We've surveyed younger people who say they prefer to message a business rather than calling or emailing them. And so I think we're going to see more business adapt to this behavior because they have to. Businesses always go where the people are. So after using this kind of text message with businesses, I have to say myself, it's something I highly prefer. So yes, this is the hidden opportunity with Meta, is this click-to-message advertising with businesses that they're really focusing on. And so while people are all focused on the Metaverse drama and maybe other things with Meta, they are growing in this area by double digits, and I think it's something that can prove highly valuable and profitable for them in the future. And so this is something that is making me more bullish on Meta. And we'll see after I talk about Adobe and FedEx here quickly, the metric side of things, why it's just this company financially is great. And with something like this as an opportunity that is more solid than maybe a metaverse is a good reason to also be bullish on Meta. And again, if you're bearish, that's fine. But for me and with my investment stuff, I'm still bullish on Meta. So that's their hidden opportunity. Let me know what you think of this, text to business messaging opportunity that Meta's taking advantage of. And I see it in my life already, like I said, through restaurants, through my internet provider, with companies I know utilizing this technology just recently. So it's great to see that Meta is taking a big stance on it, and I think it's going to prove to be very successful for them. So let's move on to Adobe. Recently, their stock dropped 23.28% within 1 week. And we'll see here over the past month, they're down 28%. So what happened with this company? Well, if we look at this news article, it says Adobe stock got slammed for spending $20 billion on Figma, but it now owns a rare company. So Figma makes collaboration tools for digital experiences. And hint, hint, I use Figma for my videos, and I love Figma. It's so easy to use, it's so innovative and modern, and it's on the cloud. You go to the site and you're there, and you get off and you get back on and it's saved your work. Where Adobe still has to have that process between some platform in the cloud. I'm not sure, I'm not the most technical person, but Figma has been gaining steam. They have 150% customer retention rate, which means their customers are just getting more and more of their products, and they have 90% gross margins, which is fantastic. So Figma's revenue is estimated to be $400 million for 2022, which is a 100% growth rate in 22 for them. So they had, at the end of 2021, they had $200 million in revenue. Now they're expected to have $400 million. So they're expected to double that. Now with Adobe buying Figma for $20 billion, that's 50 times this year's revenue. That is crazy, right? To buy a company for 50 times the revenue that they're bringing in. In fact, it's the second largest SaaS deal in history. So why is Adobe doing this? Mainly for competition. Adobe sees Figma as their biggest threat, so the only way to handle that threat is to buy them, right? That's what companies do. So of course this has to go through all the regulation first, but I'm sure it'll go through because Figma still isn't that big of a company, so I don't think it'll really have the kind of pressures that other companies have when they buy bigger companies. But regardless, this is expensive. That's why investors are acting negatively. But as a user of Figma, I've watched some videos on this purchase, and I will say all the comments are very positive on Figma. So I think it's an extremely smart move by Adobe. And it is expensive, so it is a risk. But if you are the main dog in your industry and you have something else creeping in, you're going to act on it. And that's what Adobe is doing. So I am still, I think Adobe's a great investment. I think they're doing the right thing here, and they got it. They have to do this basically, because then they can potentially have this competitor that rises up and takes a lot of market share from them and grows into their own giant company. And then Adobe will be something that won't be as strong anymore, right? They're going to be looking at the old dog and Figma as the new company. So if they are able to grab that company and get into it now, that's going to be gold for them. Regardless of how expensive it is, long term it should pay off. But I do get the concerns with people saying it's too expensive of a acquisition. But keep in mind, if they don't do this acquisition, they don't make it something that Figma will latch onto and say, yes, that's enough money for us. Then they risk someone else taking them or buying them out, or Figma saying no, like we think we're worth that $20 billion for the acquisition, and then they go off and become a big competitor of Adobe. So that's what that is all about. But yes, I use Figma. If you use Figma, let me know what you think of it. But it is a fantastic system to use for digital experience, creating those collaboration type of things. I use it. I love it. So that's why Adobe dropped, but I don't think it's negative, and I think it's the right thing for Adobe to do. And if I was a holder of Adobe, I wouldn't see this as negative, and this as an opportunity to buy more Adobe if you're a holder. That's my opinion. Lastly, let's touch base on FedEx. So if we look at their stock chart, FedEx, in one day, they went down 22%, but we'll see here over the past month, they're down 27%. So why is that? Well, FedEx warns of a global recession, cutting sales forecasts by $500 million. So they came out with this projection saying we're cutting our forecast by $500 million because demand for packages are tumbling. They say earnings are to plunge 40% is what they expect. And before this, they came out and said this, analysts were expecting a gain on profit. Now that's not going to be the case. Not only that, but they contract out their work, so all these contractors are now demanding for pay increases. So FedEx is having this perfect storm right now. I'm not a holder of FedEx, but I would not be getting into FedEx. I don't think it's an investment I would partake in for one reason, and I'm just going to flash this up, and then we'll end it there and go on to my metrics chart. But the one reason why I would not go into FedEx is because this right here. This is taking over in a big way. You ask any of your friends and family, at least in my circle, where they got certain things, it's most always, oh, I got that from Amazon. So that's all I'm going to leave it at, but if you have any comments, I'd love to hear them regarding that. So let's move to my metrics chart. This is just something I put together. I think it's good to create your own metrics chart to do your research, but I just want to go quickly over these three companies, right? These all have gone down massively. So with their PE ratios, obviously Adobe's the most expensive. It's at a 29.5 PE ratio, where Meta and FedEx are low. Meta is at a 12.4, FedEx is at 11.26. FedEx, I think, is appropriate. Adobe, I think, is a little expensive, but long term, I think Adobe's still going to be a good investment. Meta is super cheap, in my opinion, for their financials, so I think Meta here is the big still and the one I would buy. Now their EPS trailing 12 months and their last 5 years, you'll see here that all three companies were negative with trailing 12 month versus the prior trailing 12 month in their EPS. FedEx though was the big loser at negative 26.48, and the biggest loser with the last 5 years. They only grew 5.3% where the others were over 30%. So far FedEx is looking like the weakest link overall. And again, these are all different companies, but I'm just putting this out there for general kind of for something for you guys to look at and think about. Now, if we compare revenue trailing 12 months and also the last 5 years, again, FedEx is the weakest link. They have the lowest percentages of revenue growth. Now, Meta, you'll see they did say year over year, they went down about 1%, but I think the revenue trailing 12 months is a different thing where the other one's comparing the quarters only. So cash flow growth, again, FedEx is the weakest link. So you'll see Meta's grown over the last 5 years, 30.39%, Adobe just shy of 30%, and FedEx only 5.4%. Now, FedEx is the only one that pays a dividend, so let's look at their health here. Their yield's at a 2.86%, so that's not bad. Their one-year growth is 53.33%, that's very good. And their payout ratio, I think, is in a healthy range at 32%. So dividend-wise, I think it looks good. But that doesn't mean it's going to be a good investment, right? So far, looking at the PE, the EPS, and the revenue, I don't like what I see. Now, the total debt to assets. FedEx also doesn't look good here. Both Meta and Adobe have low debt to total debt to assets. So Meta is a very low 8.81. Adobe's at a low 17.53 in my opinion. But FedEx is higher, not at anything that's like massively red flaggish, but they're up there at 43.91%. Now, gross margin wise, again, if we talk about gross margin, this is the gross profit divided by sales. So it's basically the amount earned in profit per dollar of sales. So the higher, the better. And if you look at both Meta and Adobe, they're both really high, around the 90 percentile, give or take a few points, where FedEx is down at 25.81. So again, not good on FedEx's end. Return on equity, of course, is a gauge of a corporation's profitability and how efficiently it generates those profits. The higher the ROE, the better a company is at converting its equity financing into profits. Again, FedEx is low at a 15.5%, where the other two are higher, Meta at 26.52 and Adobe at 33.82. So FedEx still is looking like the weakest link. Shares outstanding. Meta wins here, in my opinion. They've gone down every quarter with their shares outstanding, which means they're not diluting us. We're owning more shares, more of that company per the shares we own. Adobe, I put a little asterisk because they've only gone down over the last quarter, but that's somewhat positive, right? Hopefully they continue that trend, where FedEx has just been going up. So they're diluting shareholders, so I don't like that. Market cap-wise, you'll just see here, Meta's the big company, but they've fallen drastically. They used to be over 1 trillion, now they're below 400 billion. Adobe is 140 billion, and FedEx is 41.8 billion. So all I want you to see here is if you're investing in any of these, the one that I think has some red flags is FedEx. And of course, I brought up that snip of Amazon. I think that's going to be a huge competitor and market share taker. So I would not invest in FedEx. Adobe, I would. I think long-term, they'll be great, especially if they get this Figma purchase to go through, despite it being super expensive. I think it's going to prove to be a great investment for them because I love Figma, and I know a lot of people do. I've seen it across the internet, so I think it's great. And Meta, yes, Meta is somewhat risky, but also they have great financials, and so they have good cash flow, they have low debt to assets, profit margins are good, return on equity is pretty good, their shares outstanding are going down, they're pretty inexpensive if you put in their PE ratio as well, and I think they'll turn things around as far as their EPS and revenue. That is, I'd say, a little bit more of their weaker link, but cash flow is strong. And so what I'm saying here is these three companies have dropped massively. Meta's one I'm bullish on. I got in at the wrong time, unfortunately, but I think if you're thinking of a position, they're extremely inexpensive for the quality of the company. Adobe is slightly expensive. Long term, I think it'll prove to be a good investment, but I don't think it'll be a huge, stock that will appreciate like a Microsoft or a Costco has over the last decade. Where FedEx, to me, this isn't a stock that I think will really provide great returns and can even turn out to be a situation where it just has declining stock price year over year, declining revenue and EPS, because I think others are going to take market share. This company has some weakness, and it has a lot to do in order to get past that. So it's just not one I would get into personally. That's just my opinion. So with that said, we went over a lot today, so let me know what you think about all three of these companies. Would you be buying any of them or staying away from any of them? And what do you think of Meta's hidden opportunity? I think that whole click-to-message advertising with businesses is a huge opportunity for them, and I'm excited to see where it takes them. So with that said, thank you guys very much. Be sure to subscribe and follow me for some awesome content. I'm always growing, so I'm trying to bring just really good things to you guys. Have a great day. We'll see you next time on Mark Arnold's Finance.